Good morning, everyone. Happy Monday. Hey, Blade Man, how are you? Welcome, welcome. Well, folks, hey, David, good morning. Welcome, everyone, to the Trading Syndicate. I'm JJ, and here is where we teach regular, normal folks how to make a buck in this crazy business just through practical, good business sense, sprinkled with a little common sense, a little knowledge about the market. Hey, Travis, Shark, what's going on? Hey, Raj, good morning, guys. Oh, hope everybody had a good weekend. Hey, Juan, what's going on? Weekend went quick. So, I put a little weekend update video out. We put it out on YouTube and stuff. It was just kind of explaining. We had liquidation on Friday, okay? But that liquidation came in, put in what we call a B profile. So the profile looks like this. Looks like a lowercase letter B, okay? And when that happens, when you get that lowercase letter B, you get liquidation. So the day before we had product liquidate into short covering bids. Okay? So what happens is the market went up the day before, Thursday, right? People got trapped here, liquidated out. But the low of Friday, that was a poor low. That means that buyers were competing here. They're all here. Unfilled buy orders. And the market, basically what it did is if you can think of these as the trapped longs and they're selling out, and you're holding up like a catcher's mitt, right? And those who are unfamiliar with the baseball reference, think of it as a bucket, right? And that catches all that loose falling inventory, okay? Also, you notice that the value area and these single prints here were where the shorts were trapped the day before, and that's where the buying came in. What a surprise. Market profile is kind of cool because it tells us where to expect buying. So say you were short on the way down, you'd know at around 63.24, there's going to be some competition to buy. You should probably get in there and buy it before it closes up at 36. So that's what happened. Then we took the inventory that was sold and we went and marked it up and distributed it for profit. Okay? So think of this as, I like to use the example of donuts, right? These donuts, they're stale donuts. They got sold out the next day. We put them on sale. Somebody bought them all, and then they went into the night market where everybody's had a little bit too much to drink and doesn't notice that they're stale and sells them for a profit. Folks, this is the movement of inventory, right? You acquire inventory, you sell it for a profit, then you mark it down. That is what causes the movement, right? That moves markets. It's really simple. Thanks, Japes. So, and it's really simple. The chart all it does is it tells us how sales are going, right? So a daily chart, if we were like sitting at Walmart going, how are the sales of this TV going? Well, this chart would say, oh, okay, we were going flat, and then all of a sudden Super Bowl's coming, so everyone wants to buy a TV, we can raise the price, right? And you sell at a higher price. Now, when everybody gets tired of paying these high prices, we have to mark it down, right? And that's what creates this movement. So this is just a price chart of sales on a daily basis, right? And the 1 minute chart is just telling us how sales are going minute by minute. So I was a little lazy, and I did my balance zones last night. And I did the balance zone here. I did it before the open, and they seem to be working okay, right? Now, if you were using a balance zone from like, a fresh balance zone, yeah, there's probably one right here that you could use. That one would work. This is a distribution balance, right? That's the same as that. So how markets work is they go from accumulation to distribution. Now, if you can distribute and hold prices higher, that attracts buyers. And then you distribute, attracts buyers. Then you put it on sale a little bit. And notice that this comes right down to this area here, right? And then all of a sudden, back up, right? And that little price stability that we're getting has attracted buyers. The problem is shorting this market, right? Unfortunately, shorting this market is difficult because there's no cost basis up here, right? This is all just empty space. No one owns the ES at 63.56, 63.60. Nobody owns it up there to sell into it. So the only sellers are the people who have product here and here, right? Let's see if this 50 works. I might redo my balance zones if they don't work. Now, we've got single prints, which is this area where we took the old high. You see that old high, the X high? Where we took that high, shorts are trapped under there. So this box is a box full of buy orders, this little green box. And if you guys are having trouble figuring out what the heck I'm talking about, don't worry. In our trading room at the Trading Syndicate, we have all this stuff. We have videos. I did a video last week on how and why support is created. Support is created from unfilled buy orders. Okay? And it's our job to look and see where those unfilled buy orders are. Right? Because when we know where the support is in a market, well, then we have a place to go long. We have a place to cover our short, right? In the old days, we would call this finding the bid, right? So a trader, usually what they'd do is they'd start shorting a market. They'd get in there and they'd short a little bit. And then all of a sudden, it's like, when you're drilling or you're digging a hole and you're digging and you're digging and all of a sudden, tink, you hit a big rock. That's the bid, right? If you can visualize it that way, oh, okay, that's not going to break. So maybe we should cover our short, right? You short something at $8, right? You sell it down, right? All of a sudden, at 6, it doesn't move anymore. That's where the bid is. When you say buy orders, do you mean limit buy orders? Yes, indeed, limit buy orders, right? But it doesn't really matter what type of order it is. Okay? Just so you know, so you don't have to I'm a big believer in simplicity, right? I've been calling this blue collar trading now for years, where you just find the bid. All you need to know is that there are buy orders from short sellers. Some will be limit buy orders, some will be, orders that when it gets there, they'll mark it in. Doesn't really matter. But it will show that the market comes down to a place, like check this out, right? And here's the practical use of it, okay? Do you see this low here? And it can't take out that level, right? Do you see how these candles all have the same low? So those buy orders are underneath. And sure, I'm sure they're limit orders, but some people will mark it in when it gets there. Some people will buy the ask. Does that make sense? So it doesn't really matter what type of orders are, but as long as there's orders. Now, why would there be orders there? Because everyone's short under here. They were shorting and they were using this high as a stop. So when you blast that high out, everyone is sitting there who didn't have a hard stop. They will be trying to cover. As they try and cover, they will realize that there is less supply and they will have to jump each other in line to cover. That's why there's support there. Okay? Notice how thin the trading is in the area where the single prints are compared to here, and now you'll see this area build out. Right? So this is where they swept the order book. So it's thin here. Hey, Patty Lou, how you doing? And it's thick here. That's where the position is. Now, what's the goal? The goal is to take this and sell it up here using the trap shorts as leverage to hold the market up. And that's basically how balance works, right? 41 and 3/4 to 43. Yeah, that would work. Yeah. The thing is, Chart, your levels don't have to be the same as mine. What you're looking for, and the most important thing, is reaction. What is the reaction at those levels? Because if you are short, you have a buy order to cover, right? So the offer will go up when it sees a lot of buying. Hey, Howard. Which level, Howard? Oh, the balance levels? I'm sorry, I didn't do that, did I? No problem. Thanks for reminding me. The shorts pay the expense so the longs don't have to. Now you're cooking with gas, Investec, right? In any business, it's advantageous to use other people's money to accomplish your agenda, right? This way, if you're a long trader and you've got 1,500 contracts between 41 and 43, all you do is when you get down to 48, you just stop selling. That creates support, right? Support is created by the lack of selling, not by a whole bunch of buy orders. The buy orders will come in, and then the sellers, right? They get wise, and they're like, oh, there's buyers. Let's raise price. Let's see if they chase. And now we'll see if we can move this point of control, which is just a fancy way of saying this is how much our goods are priced at. 70% of our goods are priced here, right? And we would like to take that and sell it up here. So it's 1,900 contracts. Let's see if we can get some people to buy another couple of thousand contracts up here and move that up. That means good distribution, right? What is the purpose of a market? Purpose of a market is to distribute something, hopefully for a profit, right? I mean, that's what the name of the game is, right? Walmart wants to make a profit. You know, all the large stores want to make a profit, right? Move the merchandise. The chart you're seeing now, this could be a chart of TVs, it could be a chart of banana sales, it could be a chart of orange sales, right? Just in this case, it's ES contracts. Right? We are always trying to figure out something to create package up, put a pretty bow on it, and sell it to you. Right? That's the goal. And we just want you guys to keep buying and buying and buying. Right? Now, we're putting it on sale a little bit. So say, for example, you were short, right? Because you see it topping out. And you go and hit that short. I'm a little late. Right? So say you're short 48 and a quarter. Put some offers out. Right? Because you see sellers, right? And as long as those sellers keep lowering the price that they're willing to sell at, your short will work. So say I'm short 48 and a quarter, I'm offered at 48 half, right? My stop's just going to be right here, right? 49 and a quarter. Where's my target? Well, I'd kind of be looking here at 47 half, 47. I'd go put in a 47 bid, see if I can get a fill on one. And if the market gets down to 47 and doesn't pay me, right? So I'm short 2 at 48 and 3/8, right? 48.38, right? I'll go put in a bid at 47 half just to see if I get anything there. Because I know there's competition, right? I know there's single prints. So when there's single prints, there's likely that I might have to pay more. Make sense? If I'm buying in an area where there's other people competitively buying, does not make sense that I might have to pay more to get my product. Right? If these single prints weren't there, it would make my covering a lot easier. Be less competitive buying. So as long as the offer keeps moving lower, right, I'm good. I'm happy. Right? So I had a 7.5 bid, did not get hit, so I'll try and get it at 3/4. If I can't, I'll just grab the offer. Right? Because it's a test short. Right? If the market gets over 48.5, I know I'm in trouble. If you lose your seller, right, then you know, right? So I took it back at 48. Not the greatest trade, but it's telling me that there are buyers here, right? So there's no reason to be short a market when the sellers go away, right? What's the point of shorting a market when sellers stop selling, right? Exactly. That's a little harder to reference, Shark, but I always just watch the offer, right? It came down here, and when it got to 48, like when I was bid 47.5 and I couldn't get a fill, I just took the offer and I closed the trade. This way, you don't get stuck in a bad trade, right? Because there's clearly bids at 47.5. I'm bid at 47.5. Other people are buying it at 3/4. I'm not going to get any at a half. Does that make sense? Close your short. It's simple, right? You go to buy something at a certain price and you can't buy it at that price. Obviously, nobody needs to sell it at that price, right? It's about as simple as it gets. Nobody talks about these things because, quite frankly, I'm putting on my tinfoil hat. I think there's a conspiracy out there to keep retail traders poor, right? I sincerely do. Right? There's the fill I wanted. So I was a little early. Right? Now we're starting to fill the single prints a little bit. When I first start trading every morning, I always use the micro, right? People will go, well, why do you do that? Well, because I don't like to lose a lot of money, right? I'm a business person who doesn't like to waste money. So if I know that my trading might not be 100% on point the very first trade I take, right? I'll go and test the market out a little bit using the micro, spend 20, 30 bucks. That's the cost of doing business. It also tells me, am I executing too quickly? Am I trying to force trades? All of those things my stop outs tell me, right? So I use that information to modify my execution, right? It's like fine tuning your execution. So when you get stopped out, instead of freaking out and having a hissy fit, try and learn from it. Know what I mean? Right? I mean, unless you're just like, pushing buttons and trading, you know. But if you're sincerely applying your edge, you're applying your setups, then your stop outs will actually give you good information about whether or not, how your execution is doing that particular time. Right? Remember, it's okay to be wrong. Just don't be stubborn and wrong. Right? Stubborn and wrong, bad. Wrong happens all the time. Right? Stubborn and wrong, expensive. So distribution, which is what is happening now, is difficult to trade because distribution at nighttime is slow, right? It's slow. We don't have a lot of participants, 31,000 contracts. See what happens when London opens. Let's see if we can get some decent liquidation. Yeah, we're at all-time highs, right? Nobody's dying to buy this thing at the all-time high, right? That's the short I wanted. And that's just putting it on sale. That's what we're doing now, right? The market's now trying to find a place where the buyers will step in for some size. And when it does, you'll see the offer or the ask price start to lift. See, if I was a bit more on the ball this morning, I would have hit it again. I would have gotten stopped out, and then I would have sold it again here when this happened. But I wasn't paying attention as strongly as I should have. Not caffeinated enough, I know. Only one cup of coffee. I should have had some more coffee. Do I wait? I like to wait for the close of the candle chart. Right. I'm trying. I would perfect in a perfect world, like say if this was, a look like say we're just using this level, right? So when you look below and fail, I'd like that candle to close above that level. Sometimes you don't get that. Sometimes it just boom, right? Depending if there's a big order, it'll just rip, and you just got to grab the offer. But in a perfect world, like to go down, come up, hit this, do this for a bit, and then boom, and then you can buy it here and put your stop here, right? One of the hardest things I find when you start your trading day is to try and match your trading with the rhythm of the market. I find that one of the hardest things to do when you first start the day. It's like I don't know about you guys, but I'll find my timings off. And that's another reason why I'll trade the micro because I'll be like, oh, okay, I'm not really 100% here. Maybe I should warm up. It's like warming up at the gym, right? Filled the single prints. Okay? So all those unfilled buy orders that were here, they are now either filled or pulled, right? Because when the short sellers, if you're short and you've got buy orders here and you all of a sudden see somebody sell a lot, you'll drop those buy orders down as quickly as you can to take advantage of lower price. And now we're coming right back to cost basis. So if you are short, we should stop somewhere around 44 right here. It'll start to slow down. And let me just show you guys where VWAP is tonight. VWAP is down here at 40, 41. Yeah, so it's my little VWAP sticker. Ah, there it is. So I don't like having a lot of stuff on my screen, so I just mark VWAP and then I get rid of all these standard deviations. Just makes it a bit cleaner, easier to read. Notice how the market came. Remember right where we took that X high? That's where the market came in and bid. Did you see that? Right to the tick, right? So if you're long maybe a little bit on a quick scalp, look for 48, 48 and a quarter. If you grab that, I didn't. I'm a little slow this morning. Don't mind don't mind admitting that. And back to distribution. Hey John, what's going on? Right. So we put it on sale, came right back. right back to where we took the stops. That's the cool thing about market profile, right? That stop at 45 and a quarter was a target if you were short on the way down. I anchor my VWAP, Nate, at 6 o'clock p.m. Eastern time. I, I think anchored VWAP's really cool, but I only use one VWAP, and that's the VWAP for the whole 23-hour session. Just makes my life less complicated. Now, when we get up to that 49.5 area, let's see if they sell into it now. Oh, cool. Satellite uplink. Neat. Is that Starlink thing? Well, not much for a trade here. Oh, cool. Military uplink. Well, you guys have any questions? So, thoughts on tonight, this morning, depending on where you are. So the market, we found the bid at 45 for now. Okay. I think we're just going to go distribute here for a while, try and move that point of control up to this area around 48, 47, right? If buyers start to line up and we take out that overnight high, of course, your target's going to be the previous day high, which is 53.5, okay? If for some reason, and I kind of hope we don't, but if for some reason we take out the overnight high, please be careful shorting because there is no overhanging supply. You'll find, look above and fails, you'll find both trades. Now, chart, you have to understand that the way this market has been created, right? The way, are you familiar with the term structure? Right? Now, most people don't know this because they've never taken a company public. But when you take a company public, you structure it in a certain way. The way a company is structured will determine how it trades. So if you take a company with a low float and don't put too much stock in the system, it will trade differently from a company that has a lot of stock in the system. It'll be easier to move the low float stock. This market has been structured in a certain way, where it's been structured for asset accumulation and asset price appreciation. So you notice that every time this market sells off, it always goes back to higher highs for years now. So anybody, I mean, it's pretty obvious when you look at a chart. After COVID, after the last presidential temper tantrum, right? That's because the market has been structured that asset managers hold stock and don't sell it. So you have a critical lack of supply, therefore the market keeps getting marked higher and higher and higher, right? Both trades work. Look below and fail, look above and fail. But in a market that's structured to do nothing but keep getting marked up, the look below and fail is a bit of a nicer trade because shorting, as you know, shorting this market is kind of difficult. Why? Because it inherently has a lack of supply because that's the way it's been created, structured, and built, right? It's pretty simple. I have a video on this in the room on how US capital markets have been structured. What is, how do they make money, right? What's the revenue generation model? In the old days, it used to be commission. And then people didn't want to pay commission anymore, so now we got to give them free trading. How are we going to make money? Right? Well, let's gather assets and charge a percentage of the assets that we gather. That ought to do it. We got a poor high, right? So there's selling competition up there at 49 and 3/4, right? Wealthy people don't sell stock. They borrow against it, right? And they get tax advantages to that, and then you don't have to get capital gains, and you get to keep your position. And if it keeps going higher, it's even better. They have fundamentally changed the way securities behave, John. Low interest rates, limited amounts of supply, asset accumulation. That's why people have lost their shorting the market and stocks because they don't realize that why would you short something where there's limited supply, right? It's like in the movie Scarface. Don't get high on your own supply, right? There's nothing wrong with shorting a backfill, right? But short and cover, hit and run, right? Don't short here and then add to it here and then add to it here and then when it does this, blow up your account. Right. Just because it's too high doesn't mean it can't go higher. Right? People always make that mistake. They don't understand the fundamentals of how a market works. And if all the supply is priced at a low point, the people who own it have they have a responsibility to maximize their profits, right? You have a fiduciary responsibility to the people who give you money to trade with to push and maximize those profits, you know, within certain risk parameters, of course. So, yeah. Right. Then they went and made shorting really popular with that movie, The Big Short. But they only tell you half of the story in that movie. That movie should have a disclaimer, right? Please remember that these people who shorted were fund managers, and a lot of them did some stuff that wouldn't really fly now, like gating a fund, not allowing people to take money out because otherwise you wouldn't be able to cover the margin calls. And just ride the position out. And they got lucky. They really got lucky that it went their way. Otherwise, they'd been in big trouble. Let's see if we can break this poor high. Just a little loitering here. You can see that they're just selling into this. See, the tops of these candles are exactly the same place. Bit of a boring session. Still a poor high, one tick of excess. We need one more tick. Anybody still awake? Yes. What do we have this week? We have Tesla earnings, right? The old Tesla. Right. So other than that, it's nothing really spectacular, right? Just checking to see if you guys are still awake. We need a good liquidation. We need a good liquidation. That would be very healthy. It's all bunged up now, this market. I mean, really, nobody, think about it, nobody really wants to buy this market here, right? The only people are buying it because they have to. They're being forced, right? Short covering, FOMO longs. That's a proper high. That's 2 ticks of excess for market profile references. Okay. Oh, this is the worst price action to short because it just creeps and creeps and creeps because of electronic trading. Can't tell yet, Sandy. Looking above and pull back. Let's see. What would cause a big liquidation chart? A material change. Like a massive material change. Right? Something that deeply affects earnings, right? In this market, it's usually some sort of a margin event. Now, the companies that own large positions, like Fidelity and Vanguard, they own 1 billion shares of Apple. So they're not going to sell that stock unless there's a material change. Like say one day Apple comes out and says, we're not making electronics anymore, we're going to make cotton candy, right? That's a material change that affects earnings. They'd start dumping the stock, right? But so far, I mean, you'll notice that this market is pretty resilient, right? It's like you might knock it down for a couple of weeks, but it's right back up and higher. Eventually, I don't know what would cause a great market crash. Everyone's looking for one. But right now, with the amount of money sloshing around, I don't see one coming. But then again, I'm not a macro guy. So my whole life, I only count on one thing, and that's this, the chart. I can't listen to people on CNBC, all of that stuff. The chart's telling me that people don't have to sell it under 63.31. So there's no reason for me to short it. Right? Price is being accepted at this level right now, for right now. So who am I to argue with this? I might think it's too expensive. I might think it's overvalued, but I'm not going to short it. Does that make sense? Short selling is the fool's game, right? You'll make a little money, but you're not going to make huge money shorting, right? The way to make huge money is to get a bunch of cheap, low-priced goods and sell it into higher-priced retail buying. Here we go. We're looking for that previous day high. How you make a lot of money is selling stock that you acquired at 50 cents into $5 volume. That's how you make big money, right? Or huge money is when you take a Nasdaq company public and it goes to $200-300 a share. But even lower price stocks, you can make insane. You can become a billionaire. I have quite a few as clients where they got their stock for 5 cents, 2 cents, 3 cents, and sold it at 20, $30, right? Shorting is to provide liquidity, right? And the old days, what you guys don't know, I'll tell you something right now, and this is not going to be popular, and nobody talks about this, right? Yeah, Burry got lucky. Burry got lucky. He did the research. He got lucky, and he also walled off his hedge fund so nobody could take money out because he couldn't make margin calls. So he could have actually gone in a really, really bad way the other way. But let me tell you something about short sellers, right? The people who are continuously short that you guys don't know because you're not in the industry. A lot of short sellers will take a short out on a company and then they'll go to that company and try and extort stock from them to cover their short. You guys don't know this, right? It's an ugly side of Wall Street that you don't know about. It's been going on for years, right? Somebody like these guys they'll go and get short with a company, right? And then they'll meet with the company and tell them, listen, we can cover our short position or we can keep bashing it until we short it into the ground and then you have no company left, right? And they'll work together, right? Short sellers aren't as clean as you think, right? Another thing is sometimes companies will blame short sellers when the insiders are the ones who are doing the selling, right? So don't believe everything that you read in Reddit rooms. There's all sorts of different ways to make money in this business. And some of them are not very nice, right? But the main takeaway for you as a retail trader is this. Trust the chart, right? Right now, the chart is telling us in ES that there's nothing for sale under 63.50, right? Look at the last 4 candles or 3 candles. They're 1 minute candles and they're about maybe 2 or 3 ticks wide. And they all have the exact same bottom, which means the market just stops selling at that level because there are buy orders underneath, right? So you see here, there are buy orders here. Now they just filled one of them or a few of them. Let's see if it holds 50, right? But that's a very tiny distribution. Look at that, right? See, and then pops right back up. If you watch the offer, That's this red line. If it keeps moving higher, it means the market has found buyers. If it moves lower, it means the market needs to be put on sale to get rid of its stuff, right? And that helps you, if you understand the mechanics of what's going on in market, it will help you not be so emotional, right? Because of course it messes with your emotions because your money is disappearing as you see it. You're looking at the screen and you're just watching your account balance go bzzzt, zip. So of course you're going to get emotional, right? So you have to find methods of operating a business that manage your risk and only take trades that make sense, right? This kind of is looking like a look below and fail soon if we break 50 and come back up over it. The other thing you have to ask yourself, how much follow through is in the market? Say if I wanted to go long or if I wanted to go short, what can I expect given the way the market's been trading? And we've only traded what 5,000 contracts in this hour that we've been on this YouTube. So maybe it's time to go get a coffee, do something that we like to do, come back, and the price action will get better. See what I mean? Oh, we're just slowly creeping higher, right? That's our target. Oh, sorry guys. This is very frustrating to try and trade that. Right? It's just trading in this little box. Hey Alfie, how are you? Okay. Any questions? Would I take a short? Uh, I'm more likely to take a short. Yeah, I mean, John, if we offer back underneath this level here, like do this, but my stop would be fairly tight. I'd be looking, I wouldn't really look for much. I kind of want to let this work itself out and maybe trade the aftermath of it, you know? It's like This is the kind of price action that's good if you want to go to sleep. Oh, see, it slipped underneath 50 just for a second there. Huh? Yeah, have a good night. Enjoy your bourbon, John. We'll see you tomorrow. Does anybody else have any questions? If you enjoy watching this, please like and subscribe. Also, come visit us in our trading room. If you want to learn how to trade in a good community of traders, we actually help each other. Keep it simple. Try and make you some money. Manage your risk. Come visit us at the Trading Syndicate. It's actually tradingsyndicate.org. There's a coupon code in there, like less than 50 cents a day. Give it a shot. And I'm JJ. If you need help, reach out. I'm vwaptrader1 on X. And I'll be starting a new coaching class. If anyone's interested in one-on-one mentoring, please reach out. We offer a lifetime mentoring program. Good stuff, Alfie. Welcome, welcome. Good stuff, folks. Well, I'm going to leave you and wait for your setup. Wait for your trade. Just take it easy. Ease into the week, right? And thank you very much for joining us. Have a wonderful morning. Trade safe. Yeah, Alfie, when you enter the room, just message me. And that goes for anyone who joins up. Please message me if you need any help at all. Or just a chat. Love meeting new people. Thank you, folks. Really appreciate you being here through this slow market time. And we'll see you at 9 a.m. Eastern Time for the next session. Bye for now.